what if we just finally realize what Larry said when he was on with Jim and the gang? There are no tariffs yet, okay? Regardless of the tweets, which have unnerved us, have certainly unnerved the markets, there are no tariffs yet. And Larry's point, the president's point, this is all going to work out just fine. Keep your eye on the ball.
Yeah, I felt really good listening to Larry, actually. The problem with this market is, and the reason why there's so much emotion and it's at highs, is because of this volatility that is so intense. I mean, the way some of these stocks, big blue chip stocks, are trading on nothing, on no news, on this tariff issues, that's what's kind of concerning, and that's what gives people pause. And so you really have to be courageous to go in and buy on those dips. And Jim and I were emailing on Friday saying this exact same thing, and we were like, which one are you going to buy? I'm like, oh my God, right? I mean, it was really very, very tough conversation. And that's the best times to buy the stocks, right? So, look, I felt good about Larry and his commentary. I'm positioned for all of this to be a negotiating kind of thing. If that's not the case, I'm wrong. My portfolio is wrong, because my portfolio is all about the economy getting better, and we had a pretty good numbers last week. You look at jobs. Friday's number wasn't great, but you average it out, smooth it out, 200,000 jobs, wages up, manufacturing good. So that translates into double-digit earnings, and I like that.
All right, let's go down to the stock exchange. Carl Quintanilla was certainly one of those who spoke with Larry Kudlow a little bit earlier. Carl, Larry's role, albeit new, is morphing into a market soother in chief.
Yeah, after the interview, Jim and I looked at each other and said it's the second time in a couple of weeks where Kudlow's come on television and has reassured markets and seen a gain, or at least in addition to the gains, but from before he spoke. We did ask him this morning, guys, to your discussion about whether or not this idea of the presidential put has been reversed, whether or not Trump's tweets are truly derailing the one-day, two-day bounces that we've seen over the past couple of weeks. Larry didn't agree. Take a listen.
I don't like blanket tariffs. You all know that. But I've also talked for years about how China is getting away with stuff they shouldn't get away with. So this president's got some backbone, right? Others didn't. And he's raising the issue in full public view, setting up a process that will include, it may include tariffs. Hopefully it'll be mostly negotiations, but you can't rule any of that stuff out. I don't think this is damaging the market at all.
All right, so that's what got our attention, guys. To what degree does the White House, do we all think this market has been damaged by this when you're, 8% off of the January 26 highs?
Yeah. Well, look, the president, Carl, as you may have heard when he was in the cabinet room just now, certainly made clear to mention that the market was up today, and the Dow is, as we speak, up quite nicely. Part of the issue has been, the president has been more forceful through tweets or rhetoric on trade, and then it's been the Kudlows of the world who have had to come out and say, wait, nothing is in place yet. This is all going to work out just fine, and it has played a soothing role on the market, and maybe that's at play yet again today.
Yeah, well, Jim, you said it this morning that maybe 2017 was the year in which President focused on getting a tailwind behind the market, getting tax reform, and whether or not that's now cushion for him to be more aggressive than he otherwise would be.
Yeah, I think Carl's definitely right. I think that there probably is some degree of, are these executives kidding me? We just gave them the biggest break, and now they're whining. And I think that the person on the street actually may feel that the president gave everybody a break, including the big-time CEOs. So there hasn't been as much outrage about his stance. Because, well, last year was the year for the rich. This is the year to protect the working.
Though I do want to hear on the earnings calls what the CEOs have to say as the new narrative of potential trade wars, Jim, come into focus.
Aren't they scared? They're scared. They're scared of the president.
So, but they can't.
I bet you're going to hear about it, though.
Why can't they talk about what they're going to do with the increased free cash flow or the benefits of the tax?
Well, I think they'll dodge anything about the president. They don't want to be the greedy one. They don't want to be greedy.
No.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.